Welcome to class. In our today's lesson, I'm going to introduce this unit on business finance. So business finance is one of the units that we are going to undertake in Module 2. And you need to understand what it entails. The first topic on business finance is all about the introduction to business finance, where you are supposed to understand what do we mean by business finance, and then we shall go on to see on the nature and scope of business finance. Then we shall proceed and see what are the functions of our business finance in an organization. Then we shall finalize by looking at the interrelationship between finance and other departments in an organization. So I'll start by saying that finance, it is like the lifeblood of a business. Without finance, the business cannot be able to run. The business will completely not be able to run without the finances. And therefore, the business finance area here, it is going to be concerned with the sources of finance to a business organization, how to manage those business finances, and the cost that is associated with acquiring the finances in a business organization, among other areas. But first thing first, business finance talks about the way an organization needs to finance its business, and that one will start from what are the sources of finance to a business organization, and then after acquiring the finance, how do we need to manage those finances? What is the cost of acquiring those finances? Because there is no way you can get these finances for free. You must actually incur some cost. Even if it is your own savings, as the owner of the business, it is going to have a cost, including the opportunity cost. Those finances could have been used elsewhere to finance other activities, but you sacrificed them and you brought them into the business, so there is that cost. And if you go and borrow the finances and then you start the business, then again you have got a cost. You have to pay those finances with interest, and actually the interest that you're going to pay on the finances that you have acquired is going to be part of the business finance cost. So in this particular area, let us see what we need to know about the business finance. What do we need to know about the business finance? And we shall start with the introduction to business finance, whereby we shall start by looking at the meaning of business finance. We shall start by looking at the meaning of business finance. So business finance is generally concerned with the management of funds in a business organization. It involves the process of procuring or getting the finances in the business, and also how we manage those particular business finances so that the organization can be able to fulfill or achieve its business objectives. So it is basically concerned with acquisition and management of business finances or funds. So there is no business that can operate without finances, and therefore business finance can be said to be the lifeblood of a business organization. Just the same way in a human being, without blood, you cannot be able to operate. The same way, without finances, the business cannot be able to operate. That's why we say it is the lifeblood of a business organization. So we shall go on now to look at the nature and scope of business finance. Nature and scope of business finance. So the nature here, it is about what it entails. And in this case, we have said that business finance, it is the acquisition or provision of money at the time when the business requires it, and also in right amount. If the business is in need of 10 million today, then business finance will be concerned with sourcing the 10 million so that we can be able to finance the activities that are in hand. And generally, business finance is of two types, or it is categorized in two types. We have got what we call the public finance and what we call the private finance. The public finance, it is all about the government institutions. The government institutions. We have the parastatals, we have the state corporations, and the others, including the ministries in the government, among others. So it deals with the requirements, acquisition, and the distribution of funds in government institutions. That involves actually the public finance part of it, including the county government in the current constitution. So public finance, it is on how the government institutions acquire, distribute, and actually finance their activities. And at the bottom line here, they must be government institutions. Then we have got what we call the private finance. Private finance is concerned with the requirements, the receipts, and the disbursement of funds in case of an individual, a profit-making business organization, or a non-profit-making business organization. So it involves either a single individual, it can be business organizations like the partnerships, the sole traders, it can be even the companies, it can be the companies, and also other charitable organizations that we call the non-profit-making organizations. The non-profit-making organization. That is what we call the private finance. That is what we call the private finance. So basically, let us see the functions of business finance. What are the role of business finance as far as business organization is concerned? The role number one is for finance part of it. Finance. It is one of the laws of business finance. And this one, it deals with the analysis that are involved in managing one's own finances or the finances of a business organization. The finances of a business organization. Then we have got another role of business finance is estimating financial requirements. So in business organization, we normally have the department called the finance department, and the finance department is going to be concerned with the role of estimating the financial requirements of a business organization. What are the needs of the business organization? And then we can be able to know how to get that particular amount of money. So we can be able to know that we need maybe 50,000 shillings so that we can be able to undertake a particular business activity. That is now estimating the financial requirements of a business organization. So that is one of the roles. The other role is designing the capital structure. The capital structure. When we talk about capital structure here, we mean the proportion of finances that is going to be obtained from the owners and the proportion that is going to be borrowed. In many business organizations, you will find that part of the finances has been brought in by the owners themselves, and part of those finances has been borrowed. So when we now have the two, the borrowed and the personal investments, we bring them together. Now we normally call it the capital structure. The capital structure. How much is financed by debt and how much is financed by the owner's equity? That is what we call the capital structure. But remember, when a business is doing well, when the business is very profitable and actually it is doing very well, then the owner's equity should always be more than the borrowed capital. When the business has got more borrowed capital than the owner's contribution, then the business is struggling and it is not doing well. The good capital structure should be one in which the owner's capital or the amount that has been contributed by the owners is more than the amount that has been borrowed by from the outsiders. Remember, borrowed capital at one point is going to be repaid. So if you have borrowed a lot, then once you pay them, then you find that the business will not be left with any finances. On top of that, when you have a lot of borrowed capital, then you have a lot of interest to pay, and then you find that a lot of the capital that you make, it is going to be used in paying those interest back. The other role of business finance is to select the source of finance. It is to select the source of finance, either to select the financing through the issue of shares, selecting the finance through borrowing a loan from the bank. The source of finance can be you either go for a higher purchase if you need an equipment. Instead of going for a loan, you can go and get that particular asset or finance it to do the higher purchase, among other. So business finance is also concerned with deciding the source of finance. And remember, not all the sources of finance are good. Some of the sources of finance are expensive, so the business finance should come in to decide the most economical source of financing. The other one is to select the pattern of investment. To select the pattern of investment. So the pattern of investment here is more basically to know what to purchase or where to invest the money now, so that we can be able to get some income as fast as possible, and which investment should wait, and then we shall finance them later on in the course of running the business. So selecting the pattern of investment is also another role the finance department is charged. Then we also have the role of proper cash management. The finance managers will have the responsibility of ensuring that once the finances have been acquired, those finances are used judiciously, so that they are able to meet the expectations that we had when we were sourcing them. So we don't mismanage the funds, and then we go on maybe having shortage in financing the activities the business was intending to finance. Then also it has a responsibility of making sure that there is financial controls. There is financial controls. This is done by use of financial control tools like budgets, making sure that an organization has a budget. And once we have a budget, that budget is going to make sure that finances are controlled, and we only spend money as per the budget that was drawn initially. Remember, if you don't have something like a budget, then it simply means that the organization will be financing any activity. And when you finance any activity, then a lot of money will go to waste, because we are not going to have priorities. And then proper use of surplus, the excess at the end of the year. You have realized the business organization has generated this amount of money. That amount of money, which remains after paying the dividends to the owners, and maybe repaying the loans to the financial institutions from which we acquired the loan, and all that, we find that there's some amount of money that can be left, which we call the surplus. Then the finance department is also going to be concerned with making sure that that money is used in a judicious way, so that it can be used for expansion of the business and or diversification of the business organization. And diversification of the business organization. Then after doing that, then the other area that you need to understand as the introduction part of it is the relationship between business finance and other departments. An organization normally has got many departments. You have the human resource department, we have the finance department itself, we have the marketing department, we have the production department, among others. But because these departments are contained in the same organization, these departments, they need to be coordinated in a way that they actually have what we call a synergy. Yeah? There is actually a synergy in that particular business organization. There is no department that can work in isolation. It must depend on another department. So in this particular case, we want to see how is the finance department going to be interlinked with other departments, or do other departments depend in any way on the finance department? That is what we are going to see. We are going to realize that other departments, they cannot run without finances. And if they cannot be able to run without finances, then they must actually consult the finance department, or they must rely on the finance department for the sake of financing. Let us talk about a department like the human resource. Human resource, it is charged with the responsibility of hiring employees, promoting the employees, motivating the employees, and all that matters relating to the welfare of the employees is normally handled by the HR office. But now, the HR cannot be able to do this work without finances, so it must seek the assistance of the business finance to get the finances to hire new employees, to get finances to promote employees, because once an employee is promoted, the salary increases. Also, we need some money for motivation, to give the employees some gifts and all that, so that they can be motivated and committed to the organization. Therefore, the HR will heavily rely on the finance department for the financial support, so that it can be able to undertake the mandate it is supposed to undertake. The other department is maybe the production department. The production department is charged with the responsibility of converting raw materials into finished products. Therefore, it needs finances to acquire the raw materials. It needs finances to buy the tools that are used in the production department and all that. So you find that it cannot work without the finance, and once it cannot be able to work with the finance, then it must seek the assistance of the finance department. The same case applies to the marketing. It needs to do the advertising. So it cannot do the advertising, it cannot erect the billboards, it cannot have the advertisement in the media and all that without the finances. Then it will come to the finance department to seek support, so that it can be able to undertake the finances. So you will find that at the center of the business organization activities, it is business finance. And business finance will determine how far the organization will go in terms of meeting its mandate and expansion in that particular organization. So note that we have said that business finance, it is the lifeblood of an organization. It is the lifeblood of an organization. So having talked about that, you need now to come in and be able to know how to answer the questions that are relating to the introductory part of it. So you can be introduced, or you can be asked, what is the role of the business finance in an organization? But you need to know how to answer those questions, so that you can be able to get the full marks. And the best way of answering such kind of a question, have a point first, and then you explain the point. So don't have a scenario whereby the point and the explanation, they are all combined. So if you are asked what are the roles of business finance in an organization, you will say, number one, it is the estimating the financial needs, full stop, and then you explain that. You get 1 mark for the point, you get the other mark for explanation. The same case to other theoretical questions that you can be asked. So whenever you are told what is the relationship of business finance with others, then you need to say the relationship of business finance and maybe human resource department, and then you explain what the HR department needs in terms of finances, which the department must heavily and solely rely on the finance department. So I want you to watch this video, because you did come out from the class, so that you can have the concept of the introduction to business finance. And then in our subsequent topics, we are going now to come in and do the calculation. But the next topic is also theoretical, which is on the sources of finance. So I'm going to prepare the notes, and then I'm going to share with you. Then we shall have to meet in our next class so that we can be able to talk about the sources of finance. Thank you very much.